Today could be day one of the future that we've all been looking forward to, at least on the robotaxi side. There's pretty good evidence of that, and we'll jump into that in a second. The markets are pretty flat this morning, but Tesla's nicely up. Last time I checked, around $313 a share. Okay, what's my evidence? All right, we'll start with CNBC. It says Tesla is now training a new full self-driving model boasting big video improvements and size upgrades, according to CEO Elon Musk. Tesla is training a new FSD model with, this is a quote from Elon, with 10x parameters and a big improvement to video compression loss. Probably ready for public release the end of next month if testing goes well. Now, we've known about this, but this was Elon updating us and giving us a little bit of new information in terms of timing. And I'm sure that this was important to the bulls, to the people that are really paying attention. Then this comes out. This is Elon Musk again on X today. He's replying to Tesla owners SV. We are working as quickly as possible to get 100 plus Teslas operating for autonomous ride hailing. Can't use the word taxi or cab in California, in the Bay Area, and allow anyone to request a ride. So autonomous ride hailing is what we need to call it in California, and wanting to be able to allow everyone to request a ride. We are working as quickly as possible to get 100 plus of these working in California. Okay, so there's your goal. There's your first expansion. Doesn't give us a timing, doesn't say in 2 weeks, but working as hard as possible. Amity's Investing says Uber CEO this morning said this about Tesla. I see Tesla as a competitor. They could also be a partner. We're talking about a $1 trillion TAM. There will be no one winner. We know Tesla's being safe and taking their time. We will be a big part of the autonomous revolution. Well, we'll see about that. I again, for the next 2 years, maybe even the next 3 years, it's hard to imagine a situation where Tesla will dominate with 90 or 100%, of this business, because it'll just be impossible to be everywhere at once, to have every kind of car, to have every kind of pricing option. So no, there will be other folks in the business, but Tesla, I'd be shocked if by the end of next year, Tesla doesn't have 70 or 75% share worldwide. Market Beat this morning says that Vanguard Group grew its stake in shares of Tesla by 1.5 during the first quarter, according to Securities and Exchange, information that was filed. Tesla accounts for approximately 1.2% of Vanguard Group's portfolio, making it their 12th largest holding. So remember, this is not something that's just held by you and me and a bunch of wild-eyed crazies. This is Vanguard Group making it their number 12th largest holding. Several other institutional investors have also recently made changes to their position. Rinky Investment increased its stake in Tesla by 3.5%. That was back in the fourth quarter. That's kind of old news. True Wealth Design LLC now owns 70 shares. 70 shares. Why do I care? Let's see. Aldebaran Financial now owns 1,174 shares. Some of you out there have 1,000 shares of the electric vehicle producer stock. That's not a lot, but Acorn Wealth Advisors LLC increased its share by 1.9 in the first quarter. They now have 1,900 shares. Well, I thought this was a more interesting article. I guess I should have read it. Usually I read the articles first. Several equities research analysts recently weighed in on Tesla shares. BNP Paribas set a $137 target price on Tesla and gave the company an underperform rating. He must not have seen all the information that's out this morning. Yeah. So �𝐚𝐽𝐻 raised their target to 303. I think we might have known that. Guggenheim reissued a sell rating and a 175 target price. And finally, Royal Bank of Canada reissued an overweight rating on Tesla in a research note about a week ago. 10 equities research analysts have rated the stock with a sell rating, 15 have issued a hold, and 17 are assigning a buy rating, according to this particular listing. This is Randy Kirk, by the way. Hit the like button right now. Hurry, quick. Hit subscribe, hit notify. There will not be, probably won't be a show tonight. There will not be a show tomorrow night. There might not be a show Friday night. Because I'm going to be taking a quick little trip, I will give you the morning show. This show will be on all three. Well, it will be on Thursday and Friday morning. But tonight, tomorrow night, and maybe Friday night, there will not be any show from me because my wife and I are driving up the coast. We're going to go up Highway 1 as far as you can go. Did you know that there's a break in the road? It's one. There have been several over the last many years, but this one has taken a very long time to fix. And just when they think they have it fixed, it breaks again. So you cannot go all the way from San Luis Obispo to Carmel, a trip that I've taken many times. So we're just going to go as far as you can go and then turn around and come back down. It is considered to be the most beautiful drive in the world, and only can be compared in the French Riviera, which I've been on that one as well a couple of times. And it's beautiful, but it's correct. That is the second best drive in the world. According to Real J and Tony, he says the New York is responding to a New York Fed piece. He says global supply chain pressure index came in at exactly the index's historical average in June. Despite all the tariff drama, including evidence of higher prices in last month, supply chains have handled this year's disruptions remarkably well. This is what companies do. I talked to the guy who does my importing yesterday. And I said, so what are you doing? What are you doing about the tariffs? He says, well, we've raised a couple of prices, but we're still waiting to see what Trump's going to do. He says, we've got most of our stuff comes from China, but, we've got other countries in mind. We've got backup plans ready to go, depending on how it all comes out. So, this is what you do. The BLM story has now shifted. More and more, we're hearing from top financial people that the labor numbers have been out at whack for at least 4 years, that the number of responses that they get from their surveys has dropped dramatically, and it comes in way later than it's supposed to. And multiple experts now have said over and over again, I've seen this in report after report, there's no excuse. It's like, well, they're sending us the information late, so then we can't give you good numbers. We give you numbers that make no sense, that are useless for you to use in your analysis. That's not an excuse. You get fired. That's what I would do. So my employee comes to me and says, well, I just gave you a number that's bogus, but it's because the darn people that I'm dealing with are not giving me the information in time. Well, change the people, or change the way you collect it, or don't give me bogus numbers. Come in and say, I don't have a number for you this month. I can't give you a number. The number I'm giving you will be so stupid, and I just change it in a month. And then I haven't seen one person yet. I keep looking and looking for one person other than me to say, okay, with the numbers we just got, they're going to be revised, right? So June and July numbers are going to be revised in September, right? They could be revised up by 100,000. Because what? Because they don't know. So don't count those numbers as being anything worthwhile. Everybody's going, well, these are the real numbers now. What do you mean those are the real numbers now? We have no idea what the real numbers are. That's the point. That's the problem. That's why she had to be fired. And that's why they need way more firings than her. They need to start over. They need somebody to get in there that has really good competency and fix it, completely change it, come up with new methodologies, come up with daily reporting like Truflation, et cetera. That's what needs to be done. There needs to be a shakeup, and then the shakeup goes way beyond firing the lady who was the head of the department. The financial press and posters on X seem to have very limited abilities to do thorough analysis. I'm not bragging or complaining, but on this channel, we take into consideration all of the following, and hopefully this is useful to you, but I'll tell you why in a minute. First of all, we take into consideration the changing demographics. baby boomers aging out and owning all of the wealth is a big thing. I said all of the wealth, but it's really only half. Owning all the houses. That wealth is now starting to be passed down to the next generation in what will be the largest wealth transfer in the history of the entire planet. And it's not going to be, well, it might be repeated a generation or two from now, but it's going to be massive. And these baby boomers are not, they're aging out of their jobs. And it's opening up positions for the next generation to start taking some of these jobs. And boomers don't spend the same way as younger people. They don't invest the same way as younger people, and all of that. And there's more, but that's a nice, those are the big four for me. Those big four are things I take into consideration as I analyze all the rest of the numbers, because it's got a massive impact. And then there's dropping birth rates, later and fewer marriages, fewer kids per woman. These are all huge. Now they're impacting household formations. They're impacting the desire of young people to own versus rent. If you don't have any kids or you have one kid, you might just feel you're better off to stay in a rental situation. And it's hugely impacting spending habits. Between the boomers, the millennials, and the Z Gen, we're seeing less consumption of consumer goods. Old folks don't go out and buy the brand new furniture and stuff anymore. And the young people are not farming the households. So when you have those two things, both of those things happening, then you're going to have people buying less durable goods, less furniture, less wall hangings, et cetera, et cetera. It's just going to buy less of it. And this is not a trend. This is something that's been going on for a while now. And we're seeing manufacturing being flat now for a very, very long time. And there's a reason for it. Then there's the impact of immigration on comparing the last 4 years to the reversal now. And almost nobody's talking about it. You have to take this into consideration on every number you see. There's millions and millions of individuals that are not coming into the country right now. And there's millions of individuals who are going home. And that's a big, big difference compared to the millions that were coming in over the last 4 years. I've done the analysis. Well, Grok did the analysis for me and says it's 700,000 dwelling units that are not going to be needed this year. And if we continue at the same pace, it'll be another 700,000 dwelling units that won't be needed next year. Now, the press is concentrating on how this is impacting jobs like cherry pickers and people in construction and people in the hotel industry. But the impact is on everything from the housing numbers to the GDP. This impacts GDP. If you have fewer people, if the population is going down, the GDP has a harder time going up. If the population is going up, the GDP has an easier time going up. So you have to take that into consideration when you're looking at the numbers. You need to have the letters AI in the name of your company, or at least in your mission statement, to get any action in the market today. But the financial press gets that, but the financial press doesn't seem to want to cover they fail over and over again to take the job losses that are being caused by AI into the overall jobs pictures. The jobs are being paired right now. And a huge part of that loss of jobs are jobs that would have been created that aren't being created. You have Palantir just yesterday or the day before give their earnings report. Man, they blew it out. Their numbers were 40-50% ahead of last year. They're growing massively quickly for a big company. They're going really, really fast. And they announced they were cutting jobs. They don't need as many people even though they're growing like crazy. And this is happening especially across the companies that are very, very good at AI. I had another report, I somehow lost it. I tried to find it this morning, where there's another company talking, it was a major company talking about 100,000 jobs that they would need to hire but don't need to because they've replaced it with AI. This is not being talked about, even as the rough numbers came in last Friday, and everybody's going out of their mind because these numbers are so bad. Nobody says, oh yeah, well, what about AI? But on this channel, we do. Then there's government. Government was one of the biggest net job creators of the last 4 years, but now they're one of the largest net source of job reductions. Did you hear anybody talk about that on Friday? USA Today did. USA Today mentioned immigration. They didn't mention AI. So they got 2 out of 3, but they were the only one. USA Today? What about Bloomberg, and Barron's and all the rest? CNBC. What's wrong with these people? All 3 of these should have been mentioned in every single report that had to do with those jobs last week. But of course, they should have said in the report about the jobs last Friday. But of course, we can't believe these numbers either. They're probably going to go up 100,000 next month. That's what they should have said. That's what any smart analyst would have said. Well, because you come to this resource, you know about these issues, and you know that knowledge, I've been talking about this for 2 years now, 2.5 years, knowledge is arbitrage in how you play in the market. Now, maybe you're not a player, maybe you're an investor, you invest in the market, and you just hold on to your Tesla stock for dear life forever. That's great. That's what I'm doing. We've got money in other stocks and investments as well, because we're old and we feel that we need to have some stuff that's like T-bill level of safety. But just because I'm holding long-term to Tesla stock doesn't mean I don't want to be well aware of what these numbers really mean. And so that knowledge is arbitrage, and you can use it to your advantage. Let me give you an example. This is something that I've been thinking about for a very, very, very long time, and especially now, given the reverse migration and given the reverses in housing, the government numbers, the number of hires, given AI, given all these things, there could be a downturn in home values that is more long-term than this one summer. Okay, so you're getting the numbers coming down a little bit. Now, there's so many things that are impacting, like people my age that are holding on to their homes. They're never going to sell. Even if the interest rates come down, they're probably not going to sell. They want to die in place. So there's a lot of moving parts to this that are keeping the prices high, unlike any other period in history. A lot of things that are keeping the prices high. But we've seen those drops before, those 20, 30, 40, even 50% drops. And we can see that kind of a drop again. I think it'll be trickle down this time, to use trickle down in a different kind of way. But there's a very good chance that if our population doesn't increase, that we're going to see housing prices decrease. Okay? So whether you like it or not, there's only one way to increase your population if the mommies aren't making babies. Now, my youngest son just had his third yesterday, 2 days ago, Monday had my 11th grandchild. So my kids are doing their part, but most kids are not doing their part. So if we're not going to grow the population having babies, then the only way we can grow the population is immigration. So we're going to have to have we're going to have a real clear come together moment by the population here about what kind of immigration we want and how many per year, et cetera. But if we don't do it, then our GDP will be under pressure. Our housing prices will be under pressure. Our equity prices will be under pressure if we don't grow the GDP. Just look to the 50-year history, the last 40-year history of Japan, and see what's happened there. Okay, that's the end of my lesson for today. TRU is sitting at, Truflation is sitting at 1.74. That's the overnight number. The 2.05 is their number for the year over year. And they've just started adding something new called the PCE index. So that's supposed to give them the daily number using the PCE's way of getting there. And that, they say, is sitting at 2.25. So I'm sorry for those of you out there who are hoping, the Democrats out there that are hoping that inflation is going to raise its ugly head again so that Trump can look bad. I know that there are those of you out there who are doing that because I see you on X. I see you saying it. Oh yeah, inflation's going crazy. We're excited because that makes Trump look like he didn't do what he said he was going to do. Well, how about being in favor of positive economic news? Because, that would be good for the entire country if things do well. If Trump is successful, it helps you, idiot. All right. Anyway, their PCE index, 2.25. And the Atlanta Fed's inflation index, 2.25. The GDP right now, according to the Atlanta Fed's daily number, is at 2.5. Now, that's the same number as yesterday because they don't change it till tomorrow, but I want to keep you up to date on all these daily numbers. And the president of the United States has dropped 1 point. He's at 47%. That is his low watermark. According to Rasmussen, he's been at that number before. He's been trending between 47 and 53. Right now, he's at the low end at 47. All right, let's see if the market has continued to act as it was. Yes, I think I'm going to be a profit once again, at least for the morning. So we've got Tesla up, wait a minute, 2.86% compared to the NASDAQ, only up 0.42, and the Dow Jones up 0.08. S&P up 0.31. Now, when Tesla is going up that much more than anybody else, and by the way, it's still going kind of straight up as I'm reporting this. Well, when that happens, that means what? We've become, there's news that's creating excitement and interest in Tesla. So I believe, in fact, that the news that I just reported is what's going on there. Maybe there's something else, but I think it's, okay, robotaxis looking closer and closer. And a lot of people have been sitting on the sidelines going, when is the bottom? When do I need to get in order to make sure I don't miss out on the robotaxi deal? That, folks, is what's called FOMO. And I think we're beginning to maybe see the beginnings. Now, it could just turn around back around tomorrow because of some bad news thing. But if we continue to see progress, at some point, the FOMO is going to go like this, and we're going to be back into the 400s. All right. So Apple, we got basically the look, I was surprised by this. Apple's up, Amazon up, the rest of the Magnificent Seven, the other four, are all down this morning. Even Nvidia down 0.22%. Whoops, I didn't give you the VIX number. The VIX number is down, good, back to 17.66. So, I'd like to see it around 12. That's risk on. Of course, again, we got this issue with keep in mind now, we've got this issue with all of the equity index being super stretched. And you cannot have the S&P go to, like 25 PE. I don't think, at least not yet. Maybe, but I don't think so. We've got the Cathie Woods are mixed completely, just like the Magnificent Seven. And let's go see if the bonds are having any impact on any of that. The bonds this morning are up a little bit. They were up more earlier. They're up 1.8 basis points, just changed to 2 basis points. So you're looking at 4.216. Now that's below my 4.25, which is good. But of course, where I want it to be is at 3.25. We'll see if we start moving that way. Oil prices up this morning because of the Russian thing. So we got the Russia thing, which is potentially going to impact the export of Russian oil, but we've got OPEC on the other side increasing their production. You got the United States, which apparently, according to Nicholas Gibbs last night, he says, hey, they've got plenty of reserve. The United States has a lot of oil that's not being produced right now that could be. So there's kind of this balancing act. We're sitting at $65.74. I think that's a fine price. If it hangs out in the mid-60s for the next year, I think everybody be thrilled. Natural gas up 0.8 this morning, back over $3 to $3.03. You got gold down $2, but still sitting very nicely up at 3,432, and silver up another 0.4, almost at 38, 37.97. Copper up 0.46, but sitting at only $4.41. So that's pretty interesting. I think I should stop reporting on the dollar because I don't get enough information to give you in the mornings. So until I can find a way to give you, maybe I'll have a new daily index thing that I report on, because what I get here on the CNBC headline numbers is not helpful. All right, we've got Bitcoin sitting at 730 up for the day, 114,000. So kind of on the low end of its recent, it was up 121, I think was the high. Okay, those are the numbers this morning. Let me remind you again, there will be no show. Well, there'll be shows Thursday and Friday morning. There'll be no shows tonight, tomorrow night. There'll be a show later today. I got a Brian White show. Yeah, Brian White and I did a show that will be out later today. I think I put it to come out at 3:00 California time. No shows tonight at all. No shows tomorrow night. And maybe not on Friday night. We'll see. I would say the likelihood is no. All right, so that's the lineup for the rest of the week. But of course, you should go back and look at Nicholas Gibbs last night because he's always great. It's amazing. We had a phenomenal time. So there's the card for that to go back and check that out. And I will see you again, as usual, in the morning. It's been great talking to you.